easier than I thought. But I still made some mistakes. Yeah. The voice cracking. I cannot hear.
Cannot hear.
So if it's easier than expected, actually the level is more or less the same. Come again?
Oh, cannot hear.
Oh, my voice you cannot hear.
Yeah.
It's easier than we expected. So we, because the way the question was set, it was in the same level. Oh, okay. It was set in the same level, but then you feel this time you have prepared well, so you understand the concept a bit.
There's
So,
also,
but not enough to go for the exam, because the exam expect much more difficult. Come again?
this
The
test
sound
happened.
not so good.
Oh, I think your sound is delayed with your video, the camera.
Or lagging. Huh? I think lagging because of the line, internet line not so good.
This test they got 30 minute extra time, so I'm more relaxed compared to the first test.
Oh, 30 minutes? No, there's no extra time. Did I give extra time this time?
Yeah, this time you had
Oh, yeah.
30 more minutes than the first test.
2 hours, isn't it? Last time was 1.5 hours.
Yeah.
So don't get too comfortable with that, because you see, in the test, 7:30, 8:30, 8:30 to 9. Oh, but I extended to 30 minutes. So in the exam, it's 2 hours. So so make sure you time yourself when you do the question. And I'm planning to do, because we don't have enough time to cover, so I have to use all the lecture time for our lecture. So we don't have the time to cover the past year question paper. So can we have extra? I don't know. Most probably we need twice lah to cover the past year paper for this week. We do it night time. Is it possible?
I'm okay.
When do you want? Okay, probably Friday night one time, and then is it okay if we do it on Wednesday night? So we do it like 7:30 and 9:30. So 2 times lah.
7:30 and 9:30, or 7:30 until 9:30.
7:30 to 9:30.
Okay.
Wednesday and Friday night. But if we have covered on Wednesday, so if we have there is no need arises, then we do it on Friday. I mean, we cancel the Friday. But if not enough to cover on that Friday, Wednesday night, then we have to do another one on Friday night. Farah, are you okay with it?
Okay.
Yeah. You have to make an effort. Huh? So your paper is already been marked, and I'm so glad that you done well, Farah and Kelvin, and you have passed your coursework. So if I'm not mistaken, you get your coursework 60. I think Kelvin is 60, and then Farah is 62, and of course Noel get 80 something lah. Okay. I'll after the moderation, then I will. We will forward all the papers to you. Okay. So we continue with our lecture today. So I'm not sure whether we can have a break because we need to cover the whole thing. Now we have covered how to do the setup of a company and what is the advantages, disadvantages to be a company. Okay, and then we don't have par value anymore. So and the other thing that we're going to learn today is about how do we prepare the financial statement. Okay, and we have covered a little bit the financial statement on the first chapter. Now we go further. Yeah. Can you open up your camera? Okay, so for today's chapter, we are going to cover the first one, par value versus no par value. Last time we have a par value, but now we don't have par value. So what is par value? Referring to the original value, that is we when we calculate dividend, we base on that original value. And we're going to learn how to record dividend. So dividend is the way how the company distribute the profit among the shareholders. Huh? Like for sole trader, all the profit belongs to the owner because only one owner. And for partnership, the profit of the partnership will be divided among the partners according to the profit sharing ratio. But for company, okay, they will distribute the profit of the company through dividend. And the third one, income tax. So income tax, since the business, the company is considered as a legal entity, so the company's profit will be subject to income tax, unlike sole trader and partnership, because their profit sharing or the profit that derived by the sole trader will be taxed. Yeah, they will be taxed individually. But for company, it's different because company is a legal entity. So whatever the profit that is earned by the company will be taxed based on as a business entity. Yeah? And then we're going to learn how to prepare another part. You see, when we prepare the financial statement, especially the statement profit or loss, the sole trader, we showing the gross profit, and then after that, we showing how to get the net profit, isn't it? That's all. Partnership also the same thing. But now, company, after the net profit, we have another additional. We call it as working notes on the appropriation of profit. So look at the wording here, working notes, meaning they are showing the working, yeah, on how the profit of the company is being appropriated. Okay, meaning to say, we're gonna show in this statement the item that is, they use the profit to distribute as dividend. That is the first one. And then the second one is the profit that is being appropriated to reserve. Okay, remember last week we have learned about reserve. We have revenue reserve, we have capital reserve. Okay, so whatever that is the management have decided to allocate into reserve, they have to show in this statement, working notes on the appropriation. So we're going to learn how to do that. And then explain the accounting treatment of share. Okay, meaning how do we do accounting on share and debentures and dividend? How do we record? And then prepare the statement profit or loss, working notes on appropriation. Okay, this is the only difference between sole trader with the company. We have this one extra working notes on appropriation of profit, and statement of financial position is the same, but it's just that they have items of reserve. Yeah, like what I've explained to you last week. And then the last one is statement of changes in equity. So these are the statements showing the increase and the decreases of all the share capital and the reserve of the company. Okay, so we go through the first one, share capital. So we have par value versus no par value. So share capital is the legal capital contributed by the owners. So this cannot be paid out as dividend. So remember, share capital is capital. So this one cannot be used by the company to distribute as dividend because this is capital. So when the company's share has no par value, so there is effectively no minimum from which to price the share, but it is determined by demand and supply for that share. So meaning we don't use par value any longer. Okay, meaning if no par value, no minimum prices. So how do we determine the prices of the share capital? So this we determine based on this demand and supply. So demand and supply meaning, I mean, you don't have to, you just need to know that this is causes by demand and supply. If too many people demand, okay, for this share, so the prices will be higher. Okay, because the supply is limited, restricted to a certain number only. So if demand of that share is lower, then the price of the share will be lower. Okay, so no par value share issue. So meaning when we have a new issue of share, okay, by the company, so the only entry that we're gonna have, okay, because once the company issue the share to the public, okay, offer the share into the public. So what the shareholder do, they will pay up how much is the price of the share. So meaning the company will do this entry, okay, because receiving cash, they debit cash. And as you know, if it's debited cash already, so the next corresponding entry is definitely credit, isn't it? So the credited account will be the share capital. Okay. So par value share issue. Last time, this is now no par value. This is the current practice. But last time, what we do, we debit cash, we credit share capital, same. But then, since we have the original value, so whatever the excess, yeah, from the original value, from the par value, so it will be credited to share premium. So that's why in the previous chapter, we have a share premium. So share premium, the purpose of share premium is to record when the share was issued more than the original value. So anything received above the par value. So like what we have here, share premium is for placing anything received from investor above the par value. So you just need to know the concept only. So no need to know deep because we are not practicing this anymore. So example, par was 1 ringgit. So the original value is 1 ringgit. So if it's issued 120 per share, so meaning 20 cent is the excess of the par value, then this 20 cent is put to share premium. Okay, so 1 ringgit goes to share capital. So depending on how many number of share issued during the time. So in the basic things that you need to understand is, so if par value is 1 ringgit, so the other 20 cent in excess will be it will goes to share premium. Okay. So the difference is with the current practice with the previous practices. Okay, for no par value, if we receive 120, then the 120 is debit cash and credit share capital. So share premium is non-existent anymore. Okay, so that is the difference. Now, dividend. Unlike partners in a partnership or sole proprietorship, the shareholders of the company do not have drawing. So remember, for company, no drawing. What they receive is dividend. the distribution of dividend is means of distributing profit to the shareholders. So as a return of their investment, just like what I've explained to you just now. Dividend are paid, proposed out of company's retained profit or retained earning. Okay, so dividend can be stated in the form of percentage base on the nominal value of that share, or alternatively an amount per share. So there are two options. They can produce by percentage or by stating the amount per share. Like say dividend 20 cent, RM 0.2 per share. That is one of the ways. And then the other one is 2% dividend. Then that is the second method lah. So first method percentage, and second method amount per share. So this is voted on and approved by the company shareholders in the annual general meeting. So you need to understand, when is this dividend declared? During annual general meeting. Okay, this is being voted, meaning only the ordinary share capital will vote. Okay, if everyone agrees, then that will be the amount of percentage or the amount of per share that they will earn as a dividend. So all the profit remaining after paying tax and settling losses can be distributed as dividend. So this is the general concept. So that is, okay, the general rules. If the management or the directors, they want to declare dividend, so they have to take into account, okay, first thing, the tax and all these losses. So need to settle all this first. So any excess, then that will be distributed as dividend. So the dividend could be paid up to 4 times per year, or quarterly basis, or half yearly, or annually. So what does it mean? So we have many methods how they do the paid up for the dividend. Can be 4 times in a year. 4 times in a year, meaning quarterly basis. Suku tahun, quarterly. Yeah? So that means 4 times they will pay. Or it can be done half yearly. So that's why this is the normal practice like half yearly. The half they call it interim, and the last one, okay, it will be the final dividend, or once in a year, annually. So that is the option. So companies have the freedom to set their own policies regarding dividend payment. So it depends on the company policy. So like what we
Which
have here, yeah,
which one is the most common way? The yearly or
half
monthly?
yearly,
Half yearly.
half yearly. Mm,
Ah,
mm. So 5-cent dividend on 1 ringgit share can also be expressed as 5% dividend or 0.05 per share. So this is the two method how they express the dividend, either in percentage or uh, per share dividend, RM 0.05. So dividend payment. The mechanic of dividend payment. So first thing, this is the procedure they follow. So normally the directors decide whether a dividend should be paid and what is the amount. So this is done during the annual general meeting. The decision of how much to pay and when, okay, is based on whether the company has made a profit. Okay, the amount of previous dividend paid and other criteria. So these are the factors the directors would consider. First thing, they want to see the current year. Are they making a profit? And then the second thing they want to see, what was the previous dividend, previous year dividend. So if they have a profit, and then the profit able to cover if they follow the previous year, so they maintain the dividend. That's how they do. Sometimes the dividend is not paid, even though the company makes a profit. So because the board of directors may have planned to expand the business further, which requires a lot of resources. So this is an option by given to the directors. So let's say the directors is very aggressive in expanding the business, so they would avoid paying the dividend because they want to use the excess of the profit they have earned during the current period. They want to retain it and then use it to expand the business, because expanding the business you need a lot of resources, a lot of cash. Yeah, so that's why they don't want to distribute that as dividend. So then this will be put into motion, and the ordinary share will do a voting, okay, during the annual general meeting. Now, like what I've said to you, the common method used declaring the dividend is twice a year. So they call it, the half yearly, they call it interim dividend. So in the case of interim dividend, those paid before the end of the financial year, the directors declare that a dividend should be paid, and it is paid during the year. So interim dividend definitely is being paid because it was declared during the middle of the year. So definitely it's being paid already. Yeah? Now, and the other one that is, because I said half yearly. Yeah? So the final dividend, the second part of dividend, the directors would recommend and then propose a dividend after they finalize the year-end financial account. And it need to be required, it need to be approved by the shareholders during the annual general meeting. Okay. So because of this, when we do the recording in the ledger account, so we have to do the recording because this is involved money, isn't it? So for interim dividend, definitely we base on when we make the payment. Okay. The double entry for the payment of an interim dividend, that is we debit retained profit. Okay. Retained profit is after we have this is under SPL also. That is uh, the statement after you get net profit. After you get net profit, then as what I've said to you just now, so we have an extra section for company only, okay, showing, we call it as working notes on appropriation of profit. So meaning this is a statement showing how the company use the profit. So one of them is dividend. So meaning if it's a debit item, is an expenses lah, isn't it? Okay, so it will be debited to retain profit. Okay, debited retain profit, and since it was paid, okay, it will be the bank will be credited. So that is double entry. We provide in the appropriation working notes on appropriation of profit, we debit, and then the corresponding entry should be credit. That is bank. Now, what about final dividend? Final dividend, okay, because this is not paid, but we need to provide. Yeah, we need to provide at the end of the year, just like year-end adjustment. So the double entry for proposed or final dividend, same thing, we debit retained profit, but the difference is this one is not being paid yet. So it become proposed dividend, or we call it dividend payables. So either of this name, proposed dividend or dividend payable, and then ordinary share. And this is liability. So where are we going to put? In SOFP under current liability. Okay, because the payment of this proposed dividend must be done within a year. Okay. Now, can you understand? So, like what I've said to you, the dividend is way how the company distribute the profit among the shareholders, and commonly we use twice a year. So the first part we call it interim dividend. So how do we do the recording? Okay, we debit retained profit and we credit back. Okay, the final dividend, because it's not being paid, the same thing, we debit retained profit, but we credit, okay, the liability account known as dividend payables or proposed dividend. And this will appear in SOFP under current liability. So that is dividend. Any question on that one? Can you understand?
Oh,
Can?
okay.
Okay. Now, next one is income tax for company. So like what I've said to you, companies is a legal entity. So whatever companies, because of legal entity, companies can own a property, okay, can sign for a contract, and then can earn a profit. So therefore, the profit earned by the company is subject to income tax. So in Malaysia, tax by company is paid by installment. So this is the current practice of Malaysian government. We call it, the department that is handling this income tax is known as Lembaga Hasil Dalam Negeri, Lembaga LHDN. But in English, we call it Inland Revenue Board. So they are in charge of this income tax collection. Normally, in Malaysia, the current practice now, they have to pay by installment basis. So before uh, the actual year that is going to be assessed, before the end, they already make payment by installment. Okay, and so this installment is based on tax estimate. So that's why, because of tax estimate, so we have to do estimation what should be the tax payable by the company. So don't worry, you are not asked to do the tax estimate. It will be given to you. So you just need to know how to do the recording for the tax estimate. Now, tax estimate is 12,000, for instance. This is given. So now, monthly installment, so meaning 12,000, we have to divide by 12 months. Okay? Because 1 year, 12 months, isn't it? So that's why we have to divide by 12 months. So meaning, resulting from this equation, so you have 1,000 per month. 1,000 per month. So the standard tax rate is actually 24% on company's income. So how they derive this tax estimate, 12,000. So they calculated based on this one. So whatever you have make an estimate of what is the profit, then times 24%. So prior to 2016, the company's tax rate varied from 25% to 28%. So what does it mean? Meaning this 24% is starting from 2016 until the current year. Now we in 2021. Okay, so we are using 24%. So before 2016, so these are the tax rate, which is higher than the current one. So which is 25% to 28%, right? So when a company has determined its actual tax payable, then it has to pay the balance of tax within 7 months of year end. Okay, so meaning towards the end of the year, so the company should know or should be able to identify and determine how much is the amount, the actual amount of tax. So they have to compare with the installment they have made so far, and any shortage, okay, meaning could be the tax is, the actual tax is more, so they have to pay, the shortage to the Inland Revenue Board, that is 7 months of the year end. So let's say the accounting period of the company ends on 31st of December 2021, for instance, 31st of December 2021. So meaning they have to make payment, okay, the shortage, okay, from the actual tax you less with all the installment paid, Okay, let's say the installment paid by the company is 12,000, but then the actual tax is 14,000. So the company need to pay another 2,000, isn't it? So 14,000 minus 12,000 is 2,000. So by 31st of July, 7 months, 31st of July 2022. Okay, because we are talking about uh, accounting period 2021, 31st of December. So they have to pay by the end, 31st of July 2022. Okay.
They just stack up the
Hmm?
penalty. Or
Come again? You only have to pay the 2,000, no penalty. Just
got
like
that
this is
got deadline for the tax guy. If we don't pay, if we just don't pay for a long time,
if
it's just
you exceeded the 7 month of the year end, let's say 31st of July 2022, penalty lah. You have to pay penalty already.
and the penalty got deadline.
Huh?
And the
The
penalty,
penalty, how much? You mean how much is the penalty?
no, I mean like if we don't pay and then ignore the penalty, and then uh,
What happened?
until and then what and then until when then some authority take action.
Of course, if you, you claim that this is not right, and then you against the government. Okay, what the government will do, they will bring you to the court.
Usually take how long?
It depends. Sometimes, let's say 3 months later, okay, they call up for you to go to the court, and then during the court, the court has decided you are on the fault side, so you're convicted. So another penalty. Penalty, the first thing, penalty because you late payment, and then they will fine you. The range of the fine is 2,000 to 20,000, and then you have to pay another penalty for late payment and the tax, the 2,000. So the penalty is very heavy. Okay, so because they want to inculcate the culture where people follow the rules and regulation, okay, and the deadline. So like what we have this example, like just what I explained just now. The company estimated the tax was 12,000. So actual tax payable is 14,000. So year end is 31st December. So the balance of tax 2,000 has to be paid within July next year. So like I'm giving you the example just now, 31st of December 2021, isn't it? So you need to pay by July, 31st of July 2022. So if the company fails to pay within this period, so 10% penalty will be imposed. So you have to pay penalty, but you are not agree with this, then they will bring you to the court. Is that what you were asking, Kelvin?
Yeah.
Okay. So this balance of tax would be additional tax payable. Okay. So meaning on this is we are talking about in the company's ledger account. How are we going to do the recording? So we have to record this as current liability in the statement of financial position. So conversely, if the company has overpaid this tax during installment, then it will be refunded. So this will be a tax receivable, current asset in the statement of financial position. So there are two possibilities. Either we overpay the tax or we shortage. Yeah, we pay lesser than the actual amount. So how do we do the recording? So the recording, if we shortage of payment, so it become a current liability, meaning the company is owing to the Inland Revenue Board. But if the company overpaid, then it become a current asset in the statement of financial position, meaning the LHDN is owing to the company. You have this example. Okay, so it's a ledger account. So the trial balance of company A showed the tax paid during the year was 50,000, and the actual tax expenses calculated at year end was 55,000. Okay, so this is the installment, 50,000. So the first thing we need to do the recording. Okay, we open up this tax account, and remember the concept tax account is an expenses. So meaning a debit item. Any increase of tax, that is how what transaction would increase the tax when the company makes the installment payment to the LHDN. So that is why, as you can see here, the first entry, okay, when the company makes payment is this one. Okay, we debit tax account. And what is the credited account? You know what? We debit tax account. What is the credited account?
Bank.
Bank. Yeah. How do I know? How do you know? Based on this. You look at the particular here. So meaning we debit tax account 50,000, we credit bank 50,000. Okay. Then after that, the actual tax calculated at year end, meaning towards the end of the year, the company identify what is the actual tax. So they have identified the actual tax is 55,000. So now you need to record this into the ledger account. So remember, the actual tax goes to SPL. So that is why uh, we, you see, it's already here. It's already inside here. I mean, not inside here, like partly inside here. That is when the company makes installment payment. So that is why, because this is what I said to you, an expenses, isn't it? So an expenses we have to close off, correct? We close off and then post into the SPL. So that is why we have to credit the expenses account. Okay, the amount that is we want to close off and put into SPL. So how? So we credit. Okay, we credit 55,000. Okay, 55,000 in the tax account. And where do we debit? Where do we debit, Kelvin?
The
Look at the particular. Where do we debit? Look at this, the particular.
the
This is
SPL.
particular. Yes,
Mm,
we debit into the SPL, but we don't see debit entry in SPL because we are
yeah,
preparing statement profit or loss in a statement form. So we only see less and add. So less is representing debit. Okay. So the actual amount is 55,000. So meaning the amount that shortage which the company has not paid is 5,000. So how do we know this 5,000? So first thing we do the total, line and select the highest total, which is 55,000. So use the 55,000 as a total for each debit and credit total. So debit total is 55,000. In order to make 55,000 as a total, so we have a balancing figure of 5,000, isn't it? So we have identified 5,000. So this is debit. So what is the name of account that we're going to credit? Okay, so we because it become a current liability, isn't it? So that's why this is your closing balance. Okay, closing balance. So what closing balance is this? Debit or credit? Farah?
Debit.
No, it's credit balance. How do I know it's a credit balance? Okay. To make it easier, look at the balance BD below the total. It is on the credit side. The
Oh yeah,
understanding
yeah, yeah.
is
It's on the credit side. Yeah.
yes. The understanding is total credit 55,000, more than the debit side by 5,000. So this is credit balance. Okay. So this become SOFP, Statement of Financial Position item. So under current liability. So that is the meaning of this one. Okay, current liability in the statement of financial position. So how do we make this recording? So this one, okay. What about example 3? This is example 3. This is reflecting this one. It will be treated as a current asset in the statement of financial position. Okay, how do we reflect that? Look at this example 2. The trial balance of company B shows that tax paid during the year was 50,000. So this is the installment. Okay. Every month they make an installment, and until the 12th month, the total is 50,000. So how do we record in the tax account ledger? So 50,000 we debit. Yeah, we debit the tax account. Why we debit? Because tax account is an expenses. So the corresponding entry must be credit. So what is the title of account that you credited? Because it comes from the check, yeah. So meaning the name of the account that is being credited is bank. Okay. So at the end of the year, so the company have identified the actual tax that they need to pay is actually 48,000 only. Then we do the recording in the ledger account. So how do we record? So remember the process of closing expenses account. Okay, to close expenses account, meaning we have to credit, yeah, the expenses account, so which is tax account, we credit, okay, the actual amount is 48,000, and we debit to SPL. Okay, resulting from this entry, so we can make the total line. Okay, select which one is more. So 50,000 is more. So use 50,000 as total for both sides, debit and credit. Now, debit total is more than the credit total by 2,000. So 50,000 minus 48,000. So 2,000. So this is your closing balance, meaning debit balance. Total debit more than credit by 2,000. And look at BD, balance BD, debit sign. Okay.
The 48,000 is just what's written in the SPL. So
Mm,
we need to
record
deduct to find the tax receipt.
the remaining. Yeah, to find the balance. Okay, meaning we do the recording. Okay, as you know, tax account is an expenses. So when you close the expenses account, we do the same method. That is, we have to credit the expenses account. So meaning we credit tax account 48,000 and we debit SPL. So when we do this, then you need to make total line here. So select 50,000 or 48,000. So since 50,000 is higher amount, so use 50,000. So the balancing figure, which is 50,000 minus 48, 2,000, will be the closing balance. So this closing balance is debit balance. So therefore, in SOFP, Statement of Financial Position, we record under current asset. Again, okay, in this cost, so you no need to compute the tax expenses to be estimated by the company, but you should know the recording of tax payment and payable in accounting books. So how to estimate the actual tax and how to estimate the installment, you don't have to know, but you just need to know how to do this recording. So which is resulting, we have a tax receivable debit balance. Okay. Any question before we proceed to the next one?
Okay.
Okay.
So the tax estimate is for the accounting student only, right?
No, even accounting student also they don't have to do that. It will be provided in the question.
Oh,
That one
okay.
is learn another subject. We call it taxation subject. So this is accounting. We only need to know how to do the recording on it.
Okay.
Okay. Now, next one is working notes on the appropriation of profit. So this is what I'm saying just now. Okay, different from sole trader. Okay. So when how do we prepare statement profit or loss? Okay, for sole trader and company is more or less the same, except for this. Okay, we have for company, they need to make this working notes on appropriation, okay, which is a statement showing how the profit of the company is being appropriated or being provided, I mean, being distributed. Uh, so some, okay, will be distributed as dividend and some allocated to the reserve. So the net profit before tax, okay, when we start with working notes on appropriation, we'll start with net profit before tax is reduced by the tax charge for the year to arrive at the profit for the year, profit after tax. Okay, we start with profit after tax. So meaning after we get net profit, so since we don't have tax on sole trader or partnership, isn't it? So we minus the tax, then this is where we start with the working notes on appropriation. Profit for the year. So profit for the year means profit after tax. What is profit after tax? Profit you already minus with the actual tax. Yeah, the actual tax that we have done. This one, when we close the tax expenses, okay, we post the actual tax to the SPL, isn't it? So this is credit tax account and debit SPL. So the debit we show in this working notes on appropriation. Okay, the statement working notes on appropriation. Now, then these are the three item only inside the working notes on appropriation. So the profit for the year may be appropriated, may be utilized, may be used as follows. So one of them, how they use it, okay, payment of the dividend. So payment of dividend, there are two, like what I've explained to you, usually half yearly. So the first will be payment to interim dividend. Okay, bear in mind, this has already been paid because it's declared during the year. So payment of interim dividend. And the second one is final dividend proposed. So final dividend proposed when we debit the retained profit. This is debit retained profit. You know, initially when we, in the notes showing the entry, yeah, the journal entry for when we provide final dividend, we debit retained profit. And then we credit dividend payable or proposed dividend. Okay, this is how. Okay. So we debit the final dividend proposed in the working notes on appropriation of profit. And the third one, okay, is transfer to reserve. Okay, reserve that we have learned last Last week we have general reserve, we have asset redemption reserve, we have revaluation reserve. Okay, those reserve transfer to reserve such as general reserve, specific purpose reserve, asset replacement reserve. Okay, so this specific, they meaning they can only use for that purpose only, specific. Other than the stated purposes, you can't use. Yeah, so like what we have, asset replacement reserve, the purpose of transferring to reserve is to indicate that part of the retained profit is reserved for business and not to be distributed as dividend, meaning it is reserved for asset replacement. Okay, and resulting from this appropriation, so if you still have remaining profit, this is what we call the unappropriated profit. Unappropriated, meaning we did not appropriate that amount to any of these three, as a dividend interim, as a final dividend, as a reserve. Okay, so this is unappropriated profit. Is added, okay, to retain profit from previous year and carried forward to the following year. So we will plus this with retained profit from previous year, so become to the next following period. We carry forward. Okay, can you understand the general principle? Okay, next one, general reserve. General reserve are also referred as free reserve. Okay, meaning free reserve, anything can, the amount that we have in general reserve can be used for anything because it's free reserve, general. Okay, it's not specific. A company article of association may state that an amount should be put aside to general reserve before paying dividend. Okay, the auditor should check if there was enough profit when the company created the general reserve. Okay, meaning the decision on allocation to the general reserve, okay, they have to really check whether they have enough profit. Okay, benefit of making a general reserve, more liquidity, make available working capital for company for paying off obligation. Okay, because the general reserve is not specific, anything can be used, okay, from that reserve. So what is the advantages of having this reserve? Because if we have this reserve that is general, okay, meaning we have more liquidity, meaning we have more money that we can settle, we can use it as a working capital in case need arises. Meaning if you have the company have overdue current obligation and they don't have the enough liquidity or enough cash to make payment, so they can use this general reserve, okay, to pay off the obligation. And the other one is capital redemption reserve. So this capital redemption reserve is known as specific reserve. So which is paying off an issued share and then issued to shareholders as bonus share. Okay, meaning they use this reserve to redeem for any unissued share. Paying off unissued share. Like what we have here, example 4. Ascend, Senam Berhan, has accumulated retained profit from previous year totaling 240,000. During the recently ended year, it has made a net profit of 1,900,000, which would be appropriated as follow. Okay, so this is appropriation. item to set aside 380 to reserve. Okay, so we need to identify what are the things that we need to record. So the first thing, right, 240,000, and the second thing is this is your net profit. Okay, so then this is what you set aside. So what I put yellow, so this is we need to do the recording. And then 465, 645. So how do we record? First thing, accumulated retained profit. So meaning this is your opening balance. Okay, how to record this? You record as opening balance. Now, remember, retained profit is part of reserve. So meaning reserve is a credit item. So always the opening balance will be on the credit side. So that's why 240,000 from this transaction is on the credit side. Okay, and then it has made net profit totaling 11,900,000. So because you need to learn in T form how we prepare retained profit, because sometimes the question will come out for you asked to do the ledger for the retained profit. Yeah, but in actual fact, the retained profit we prepare in the statement form, but this is only an alternative presentation. So you must know how to prepare it as well, not only in a statement form, but also in a ledger form. Okay, so now profit for the year. Okay, this is profit after the tax. So which is after we get the net profit you less with the tax, then we have profit for the year. So how do we record? So this will be on the credit side, okay, of the retained profit, credit side. Okay, and all this appropriation will be on the debit side. So first thing is 380 as a reserve. So that's why, meaning we debit retained profit, we credit general reserve. And the next one is the interim dividend, 465. So we debit retained profit, we credit back because this is paid. Yeah. And then the final dividend proposed, we debit retained profit and we credit dividend payable, or we call it proposed dividend. Then this is all the appropriation. So we make a total line. So total credit is more because when you add this up, so we have 2,140,000, isn't it? So use this value as a total for both sides. So debit also we make 2,140,000. So you minus with all the appropriation item, then we have the balancing figure, which is a credit total. So total credit more than the debit side by 650,000. Okay, and to make it easier, you look at BD below the total that is on the credit side. So this is credit total. Okay, so that is how we prepare retained profit in a ledger form. Now, let's see how do we prepare retained profit in a statement form. So look at this illustration number 1. The following information was obtained from the books of Global Berhad on 31st of March 2016. So the accounting period ends on 31st of March 2016. So when is the beginning? 1st of April. Okay, look at the date after this, 1st of April 2015. Okay, so this is what we have in the information. So initially we have this authorized and issued share capital, but We don't use this anymore, but just for your knowledge purposes. So we have authorized, meaning the maximum, okay, of share capital that the company, Global Sdn Bhd, can issue. So they have two. One is preference share, so maximum 4 million ringgit with 7% fixed dividend. And then 10 million ringgit of ordinary share. Okay. And then balance at 1st of April 2015, meaning this is the opening balance. Look at the date, 1st of April, ending is 31st of March, isn't it? So we have opening balance for general reserve existing, 150,000, and retained profit also we have 240,000. And during the year ended 31st of March, so this is what the directors decided. Interim dividend were paid, meaning this is paid. So preference share, 3%. So meaning if they have paid 3%, okay, like what I've explained to you, the features of preference share, they are fixed dividend, isn't it? So if they have made an interim dividend 3%, what is the remaining final dividend? So based on this one, 7% is maximum minus 3%, so another 4% more for preference share. Okay, ordinary share is 5% interim. So profit for the year ended. So remember, profit for the year, like what I've said to you, this is a profit after the tax, net profit minus the tax. So profit for the year, 31st of March, is 1,900,000. So when you prepare your statement of working notes on appropriation, so you start with profit for the year, 1.9 million. And 31st of March, the directors proposed the following. So this is your appropriation item. Transfer 20% of current year profit to general reserve. Payment to final dividend for preference share. So this one, interim dividend, you need to include as one of your appropriation items as well. And then payment of 7% final dividend for ordinary shareholders. Okay, so final dividend for preference share, like what I've said to you, they already paid 3%, so 7% is the maximum. So another 4% more for the number two. And for number three, okay, 7% for ordinary share. So required. Now prepare the working notes on the appropriation of profit of Global's Neighborhood for the year ended 31st of March. Now, when the question state in this manner, prepare the working notes, meaning you need to prepare in the statement form. Okay? But if they ask, prepare the ledger account for retained profit is different, meaning you need to prepare in a T form, just like this one. Yeah? Retained profit and working notes on appropriation is the same item, but this one is in a statement form. Okay. And B, prepare an extract out of statement of financial position. So you need to put the statement of financial position, then put in bracket extract, yeah, as 31st of March 2016. So this is the solution. Now we need to prepare in the statement form. So 3 columns also, same thing like SPL. Okay, 3 column. So we start with profit for the year. So remember, the heading will be working notes on the appropriation of profit for the year ended 31st of March 2016. So how do you remember this? Okay, so remember this is a statement showing how it is the profit being appropriated. So meaning your heading must be working notes, meaning a statement showing the working. Yeah, working notes on the appropriation of profit for the year ended 31st of March. And then on the top, don't forget, you need to indicate the name of the company because you need to know which company is this. Yeah. So put down Global's Neighborhood. And then the first item that we need to indicate will be profit for the year. So you put on the third column 1.9 million. Then you work on your appropriation. So less, okay? Remember, less appropriation. So the first item from the additional information given, transfer to general reserve. Okay, according to the question, 20% goes to general reserve. So 20% of the profit for the year, 1.9 million. So we have 380,000. Put on the second column. Okay, interim dividend paid. So remember, interim dividend not only for ordinary share, but as well as the preference share. So you need to use the first column. So you need to do adjustment first. Huh? So ordinary share, how do we determine? Okay, look at the value of the ordinary share from the question. We have 10 million, isn't it? So 10 million, this one, then times the interim dividend as stated here is 5%. So 5% of 10 million. So 10% of 5 million, 500,000. Okay. And then interim dividend for preference share. So we have preference share in the question is 4 million. So times 3%. So 120,000. So add, then put into the second column. So 620,000 as one of the appropriation. Then the last one will be the final dividend. So final dividend also we have ordinary share and preference share. So ordinary share stated in the question 7%, isn't it? So 10 million times 7%, so 700,000. And then final dividend for preference share. So this percentage was not given, you have to find it because you knew from the question they give you a 7% preference share. So meaning if you have provide interim dividend 3%, so 7% times minus 3%, so remaining 4% become a final dividend for preference share. So 4% times 4 million is 160,000.
Do we need to write the calculation in
Yeah,
which?
this is like your working. You
Okay.
need to show it. Yeah, you have to show it the working. Good question. So then you add, so 860,000. So put on the second column. So the total appropriation, which is less. So make sure you put a negative sign. Yeah, 1.860 million. Yeah, 1,860,000. Sorry. So minus, so 40,000 only left over. So we need to plus with the retained profit brought down. That is from the question, isn't it? So look at this. Retained profit brought down 240,000. So plus, okay, with the retained profit, sorry, the profit after the appropriation. So 40,000 plus this. So we have retained profit carried down 280,000. So this you need to include into the reserve in the statement of financial position. So that's why Global Sunamberhad statement of financial position as at 31st of March and then put extract. So meaning under authorized and issued share capital, okay, and reserve. So reserve you will have, okay, one of them is retained profit based on 280,000. Okay, 280,000. So we go through the share capital first. So authorized and issued share capital. So you need to state the number of share first, and then second one will be the type. So you need to put ordinary share first before the preference share. So 10 million ordinary share, so 10 million. And then 2 million number of 7% preference share. So you put 4 million here. Okay, from the question. From here. So 4 million of preference share with 7% fixed dividend. Karen. Now, then 10 million and 4 million, so 40 million you put on the last column. And reserve, okay, general reserve, we have in the question existing 150,000, isn't it? So you put in a bracket, show the working, plus with the newly appropriated, okay, 380,000. So plus, then we have 530,000. So retained profit, okay, from here, 280,000. Okay, done. So then the total value you put into the second column. And in your current liability, so current liability should be below this, not on the top. So this one should goes down. This one should underneath. Okay, it should go down, but I cannot change right now. It should be here after the reserve. Can you understand? Yeah.
So the final proposed dividend always under liability.
Yeah, because the understanding is when we provide the final dividend for ordinary share, that is at the end of the year. So this is not actually recorded yet because it's not being paid, isn't it? So if it's not paid, become a liability. Did I answer you? Well,
Yeah.
because we have not made payment, so that's why it always on liability side.
Is it possible to pay the final dividend first before prepare this statement?
Not possible because you see, like in this question, the director proposed. So the word propose meaning it's not being paid yet. Baru
Or
proposal, baru cadangan.
or
Like this one is paid already. During the year, interim dividend were paid. This one is paid.
oh, I see.
Mm.
Okay.
Yeah. Any question? Class? Farah?
Okay.
Okay. So financial statement of limited company. So you read this one. So this one, financial statement of limited company. We are following MFRS 101. So meaning Malaysian Financial Reporting System. Yeah, MFRS. Malaysia Financial Reporting Standard, not system, standard. 101 for compliance by all limited company in Malaysia, especially the public company. So public company meaning the company that can normally ended with limited, yeah, not Sendang Berhad, limited company. So meaning anyone can buy the share. So because of any public can buy, meaning the money belongs to the public, so they must have a financial reporting standard, so which they have to follow. So in this MFRS 101 set out the component of said financial statement. So you must have this 5 financial statement. Okay. So you need to know only in knowledge. A statement of financial position, one of them, statement of profit or loss, okay, and a statement of changes in equity, meaning partly derived from the working notes on appropriation of profit because we are showing the changes of the reserve of the company. And then another one is a statement of cash flow and the notes of the account. So in this financial statement, so referring to all these 5 components, should present a true and fair view. like what I always said to you, true and fair view. So that explains why we have we need to follow the concept of prudence concept. Why we have accrual concept? Okay, because we want to show true and fair view. What is the meaning true and fair view? Meaning the financial statement, they try their very best to show or portray the financial statement, that is statement of profit or loss and the financial position, as accurate as possible, as actual as it can. So that's why even the expenses is not being paid, they try to reflect it in the financial statement. Like if there is a revenue that is already earned but not received the payment, we try to include in the financial statement because of this true and fair view. So based on all this accounting concept that we have learned, meaning going concern. Going concern, meaning when we prepare the financial statement, okay, we assume the company is going to continue the operation. And then when we prepare the financial statement, so we need to observe or follow the accrual basis, meaning revenue is appropriately matched with expenses in arriving at the profit for the year, regardless the payment made or revenue received. Okay, so we have to use accrual concept. We have to observe accrual concept in preparation of financial statement, so that we take into account. Okay, we record the revenue according to as it is earned, not received. Yeah, the cash received. As long as it is earned, so we do the recording. So that's why we have the year-end adjustment, because we did not record those revenue that is not being paid yet. So we have to do adjustment. Okay. So same thing with the expenses. We need to recognize the expenses as it is incurred, not as it is paid. So we do the year-end adjustment. And when we prepare this financial statement, it must be consistent. Consistency of presentation. Why this is consistent? Okay, because we need the accounting policy in preparing and reporting the various items in the financial statement should be followed from period to period to enable comparison. So meaning when the investor, they want to do analysis, okay, they can compare from one year to another year whether the performance of the company is improving, right? And then materiality and aggregation. So each material item should be presented separately. So meaning if the amount of the expenses or the any revenue is significant, it has to be presented separately. Immaterial item, the amount is not so big, not but it's a small amount. So it can be aggregated, meaning we accumulate, okay, with similar item and present it as one item. Offsetting, asset and liability must not be offset. Only revenue and expenses. Okay, revenue and expenses must not be offset. They must be shown separately. Okay, meaning offsetting we can't do. We have to show this separately so that we can the investor can see transparency. Okay, how much is the asset, how much is the revenue, how much is the liability of the business, it's clearly stated. Okay, so that is the guideline to prepare the financial statement based on the accounting concept. Now let's go through this illustration. The following balances, okay, were obtained from the books of Advance and Berhad, okay, for the year ended 31st of December. So you are given authorized issued capital, ordinary share, preference share, and then balance of retained profit 1st of January. So meaning this is 2015, so same as calendar year. Land and building, motor van, accumulated depreciation of motor van, opening inventory 1st of January, bank overdraft, allowance of doubtful debts, trade receivable, trade payable, salary, wages, advertising, maintenance expenses, postage. So meaning you have to prepare a statement profit or loss, the normal one, and then after that show the working notes on appropriation. So you are given office rent, motor expenses, interest, insurance premium, purchases, sales. So you don't have debit and credit here. So you need to be able to identify which one is debit item, which one is credit item. And these are the information that you have. Okay, the first one, inventory as at 31st of December, valued at 8,150. So meaning representing the closing inventory. Okay, the adjustment. Okay, this is number 2, like the normal one. Rent paid in advance as at 31st of December 2015 amounted to 120. Meaning, okay, we have to reduce the rental expenses here, okay, because this is in advance. So minus 120, the normal one. We have learned this before. So rent, where is the rental? In this list, we have rentals expenses. This one, 3,000 minus 120. Okay, so minus, and then 120 goes to SOFP as current asset. Okay, and then allowance of doubtful debts to be increased to 3% of the trade receivable. So we have the trade receivables here, 7,000 times 3%. 3% of trade receivable, how much is 3%? 0.03 times 7,000. So you have 210. And we don't have existing doubtful debts, isn't it? So we don't have, then this become an expenses. So we debit doubtful debts and we credit allowance for doubtful debts. Motor van depreciated 20% per annum based on reducing balance method. So meaning you have to minus, motor van, we have 25,000 minus 5,000, so 20,000, isn't it? So 20,000 you times with 20%, so 4,000 times 20%, so 4,000, meaning debit depreciation and credit accumulated depreciation. So that is the adjustment, year-end adjustment that we need to do. And then tax expenses for the year 2000, okay, for the year. So meaning we need to put into SPL, and this is not paid. This is not paid. So meaning if it's not paid, become liability. Under current liability, you will have tax payable. So this one, irrelevant. We don't need this because it's already been calculated. And these are your appropriation item, propose. So this is all not paid, propose. Final dividend, 5%. So how to calculate this? 5%, look at the ordinary share, 40,000. So 5% of 40,000. Okay, 0.05 times 40,000. So 2,000. Meaning in appropriation, okay, you debit retained profit and then credit dividend payable or dividend proposed dividend. And then same goes with preference dividend. This is not being, because we don't have interim dividend during the year, so paid in full. So 5% of 40,000. Okay, so 5% of 40,000, same thing. So 2,000. Transfer to 5,000 to the general reserve. Okay, reserve. Then you prepare the statement profit or loss, working notes and appropriation for advance and overhead, and prepare the statement of financial position. So meaning we have to prepare in a statement form, okay, not a ledger form. So this is how do we do this? Statement profit or loss for the year ended 31st of December. So sales, you get it from the list, okay, 136,590. Then you less with cost of goods sold. So remember, in the list of the account, you have wages there. So meaning this one's supposed to be another column here. Yeah, but you can do also combine into the second column, but I prefer you have another column here. The first column, you do the adjustment on the purchases first. Okay, purchases, add purchases plus wages. Okay, since you only have one item, then you can combine open inventory plus purchases plus wages. So you have 96,610, then less closing inventory, okay, from the additional information, okay, and then this is your cost of sales. So remember, this is less, meaning it must be in bracket 88,460. So you have a gross profit, okay, 136,519 minus 88,460. So we have 48,130. Now the gross profit. Any problem with this? Can you understand?
No.
Okay. Okay.
Okay. All right. So then you less with expenditure. So the expenditure from the list of the account of just now, we have salary, okay, 20,000, advertising, 7,200. Okay, just take from the list because there's no adjustment on this. Maintenance expenses, 850, just take it. Postage also, 950. Only office rent, yeah? So we have adjustment. So 3,000 minus 120. So this minus is actually crediting, yeah? Credit entry. So the debit entry is in the SOFP when you provide under current asset. Okay, current asset, prepaid rent, 120. So that is debit entry. And then that's all for the rental. And then we have motor expenses, no adjustment, just take from the list, 5,000. So same goes with interest and insurance premium, 2,000 and 1,000. For depreciation, okay, like what I've said to you, so this is reducing balance method. Cost you less with accumulated depreciation. So 20,000, isn't it? So 20,000 times 20%. So 4,000. And just now I said trade receivable, 7,000 times 3%. And you have the existing. Oh, I overlooked, yeah? You have the existing. Allowance of doubtful debts, 140. So meaning since the question already stated here, allowance of doubtful to be increased, so meaning is an expenses. Eh? So that's why under expenditure, doubtful debts. So 7,000 times 3% is 210 minus 140, so 70. So it will be doubtful debts. Okay, then you total all the expenses, so you need to less because the symbol here, gross profit less expenditure. So bracket, and then gross profit minus 43,950. So this is net profit before tax, 4,180. Then we provide the tax, okay, from the additional information, less tax expenses, 2,000. Then you have profit for the year. So this is the amount profit for the year that you need to use to start with your working notes on the appropriation. Okay, this one for sole trader until up to here only, isn't it? So for company, so you have an extra statement. So we call it working notes on appropriation of profit for the year ended 31st of December. Put the name of the company. Okay, so this is profit for the year 2,180. Okay, from the statement profit or loss. Then the appropriation item, okay, it is clearly stated in the question just now, isn't it? So there are three. One is ordinary share, okay, final dividend, preference share as well, and the last one is transfer to general reserve. So 5% of 40,000. Okay, same goes with preference share. You show the working 40%, 40,000 times 5%, so 2,000. And transfer to general reserve stated in the question. Okay, from additional information 5,000. So plus altogether we have 9,000. Okay, you minus 9,000. Put the bracket here because this is less appropriation. So we have negative. Okay, which is the appropriation item is more than the profit for the year. But we have retained profit brought forward. This is from the list of the account just now. Okay, 31,120. So this will be your retained profit carried down, or we call it carried forward, CF or CD, 24,300. So this goes to statement of financial position under under reserve. Reserve, so you have retained profit, then put here 24,300. Okay. Now, for statement of financial position, okay, as usual, so you need to state the asset first. So the asset you need to divide into non-current asset and current asset. So non-current asset, we have land and building. Okay, you prepare three column. Okay, land and building. Okay, the second column is to list down all the non-current asset item. So land and building, we don't have depreciation, so we put on the second column. But motor van, we have the depreciation, accumulated depreciation. So you put on the first column. Okay, you need to do the adjustment first. 25,000, okay, minus 9,000. So how do we get 9,000? Okay, the 5,000 is from the list of the account, the opening balance of accumulated depreciation. Okay, and then we plus with the new current year depreciation, which is 4,000. Yeah? So that's why it's 9,000. So the net book value you put on the second column. Then you add the second column and only the total value, the non-current asset, put on the third column, 113,800. Okay, then current asset. Current asset, we have closing inventory. Okay, closing inventory, make sure you get from the additional information, not opening inventory. So opening inventory already sold, so it's not an asset anymore. So only the current, the closing inventory is an asset. So put in the second column. Then trade receivables, since we have the adjustment for allowance of doubtful debts, we put on the first column. Okay, do the adjustment first. 7,000 minus the allowance of doubtful debts. Then the net trade receivable you put on the second column. And just now we have prepared rent. Okay, add all together. So the total, okay, put into the third column. So non-current asset plus current asset. So this is your total asset. So it should be the same as the liability side together with the capital. So financed by authorized and issued share capital. So we have 40,000 for ordinary share and then 40,000 for preference share. So remember, how do we present it in the SOFP? So you need to put the number of share, the type of share, and then what is the value. Okay. Then reserve. So you put on the second column, you list down all the reserve first, retained profit, and we have general reserve. Then the total only put on the third column. Current liability, okay. We put on the second column also can. Okay, 5 million, 500, 5,500. Okay, tax payable. Remember the tax is not being paid, so we only provide, so it become liability. So same goes with the proposed final dividend for ordinary share and preference share, and we have bank overdraft. So that will be your total current liability. You add all together, so then you plus with the reserve and plus with the share capital. So you should be having the same as the total asset, 128,860. Now, can you follow? Can you follow the presentation? How to do the illustration?
Okay. Is it different for the limited company and other company?
Limited company is the same, but it's different from the sole trader. Sole trader, peniaga tunggal, like what we have done in our the second test.
Oh, okay.
Yeah, we don't have this final dividend. We don't have tax. We don't have ordinary share. We don't have preference share. And if we have debenture, we don't have debenture also. And the working notes on appropriation. But the concept, how you prepare it, is the same. And the adjustment is the same. Because we want to prepare the financial statement according to the true and fair view, isn't it? So the same goes with financial statement of sole trader. So that's why we have here an adjustment.
So this time, no interim dividend, right?
Yeah, for this question, we don't have interim, except we only have
Oh.
one dividend. This is once in a year. The common one is twice a year. So twice a year, we have interim dividend.
Okay.
Okay, we continue with illustration number 3. So this is your authorized share capital, 1 million ordinary shares, 750,000. Okay, and this is authorized. And then issued and fully paid, so only 500,000 ordinary share, 300,000. So we record based on issued and fully paid. So not this one. And this is 50 cents each, and preference shares 2 ringgit each. And you are given the following information relate to Cosmos Berhad. So you have premise, motor vehicle, net book value. So you don't have, it's already been, set off against accumulated depreciation. Trade receivable, inventory, bank, trade payable, accrual, interim dividend, ordinary share, preference share, general reserve, retained profit, and you see, you have profit for the year here. So if you have profit for the year, meaning they have done the statement profit or loss already. They have done up to net profit less tax already. So the only thing that you are required to do here is showing how the working notes on appropriation. So that is why the motor vehicle is stated in net book value, because they already provide the depreciation for the year. Even machinery also the same thing. Okay, and so you must know this accrual. You are given accrual. So accrual, this is all what they have considered, which is not being paid, but it is incurred. So they already take into consideration. They have increased the expenses. Okay, meaning it should be stated in the liability, current liability. Okay, interim dividend. This one has already been paid. Interim. So in this preference share, 2%, 2% already been paid. The maximum is 6%, isn't it? So another 3% more. So that is the thing that you need to understand here. And this is ending 30th of June 2016. So beginning must be 1st of July 2015. So this is your beginning lah, opening balance for retained earning. Now, at the end of the year, the board of directors proposed the following. So we have, this is the appropriation item lah. So only 3. Transfer to reserve, general reserve, 29,000. A final dividend, 10%. Final dividend, and then preference shareholders are to receive the remaining dividend. So the percentage is not stated here, so you can determine by your own, okay? Which is the maximum is 6%. So meaning another 4% more. So 6% minus 2%, so 4% more, okay? So all this you need to record in the working notes on appropriation. So prepare the working notes on appropriation. So you don't have to prepare the statement of profit or loss, and then prepare the statement of financial position, and use the format below, state the difference between debentures and shares. Okay, so this is the table that given by this question. So to state the difference between debentures and share using all these factors, 1, 2, 3 factors. Okay, so this is the solution. Now, working notes on appropriation of profit for the year ended 30th of June 2016. So that is the heading, mature. So meaning this is a statement showing how the profit is being appropriated. So that's why we call it as working notes. Okay. And then put the name of the company, Cosmos Berhad. Then profit for the year, it was in the listed account, in the listed balance. So take that amount, 163,000. Then you state the appropriation item, less appropriation item. So in the question, you are given the interim dividend in the list of the account. So we have ordinary share, 15,000, preference share, 12,000. So this has all been paid already, except for final dividend, because that is stated in additional information. It's not included in the list of account. So what is being included in the list of account like this one, okay? All this time, all this figure is already completed the double entry. So you don't have to worry about that. Only this is not, not being, the double entry is not completed yet. So you have to do the double entry. So final dividend proposed. So meaning ordinary share. So how do we determine 10%? Okay, the number of share from the question, but you have to look at fully paid, issued and fully paid. So issued and fully paid, not authorized. So take 500,000 times, okay, each 50 cent, 50 cent times 10%. So 500,000, 50% is 250,000 times 10%, 25,000. Okay, for preference share, 300,000, that is issued and fully paid, times 2 ringgit, so 600,000, isn't it? Times 4%, you get 24,000. So how do you get 4%? Like what I've said to you. So you have interim, 2%. So maximum is 6%. 6% minus 2% is 4%. And then we have transfer to reserve. So this one is stated in the question, 29,000. Now, any problem how to get all this figure?
No.
Okay. Then total, so make sure this is less. So put a bracket here, 105,000 negative. So 163,000. So minus, we have 58,000. So 58,000 plus with the retained profit brought down from previous year from the list of the account, from the list, okay, plus then this will be retained profit carried down. So you follow this format. So when we have remaining profit for the year, plus with the previous retained profit, it become a retained profit carried down, carry forward to the next following year. So under statement of financial position, so again, list down the asset and you must present the asset according to the non-current asset first, followed by current asset. Okay, we have non-current asset premises. Okay, all these are net book value already. So very simple. Just take the net book value and then the total you put on the third column. So 1,050,000. Then for current asset, of course, you have to list down the first item should be closing inventory. Okay, from the additional information, 25,000. Okay, don't get confused. You don't put the opening inventory because the opening inventory already sold out. It's no longer an asset already. So only the closing inventory. Trade receivable, okay, we have 38,000. Bank, and then plus altogether, then put the total on the third column. Then the total asset become 1,135,000. And finance by, so you have authorized share capital. So this one is actually only for information purposes only. So that's why it's not part of the total for the statement of financial position. So they just state here on the top, and then you see, look at the double line underneath here. So meaning it's not part of the value in the total for statement of financial position. Okay, just for information purposes. So this is how we present the authorized share capital if it's given. Okay, but normally this not given. So if it's not given, then you don't have to present this. If it's given, then you need to present like this for information purposes. Then this is issued. This issued is the one that you need to include in the statement of financial position. So 500,000 ordinary share, 250,000. 300,000, 6% preference share, 600,000. Then reserve, we have retained profit, okay, from the working notes on appropriation, so 85,000. So general reserve, 42,000 from the list of the account, okay, the opening balance. We plus with the current appropriation from the working notes on appropriation, isn't it? So when we provide, we debit the retained profit and then we credit general reserve. So that's why this is plus here, 29,000. So 71,000 altogether. Then the total we put on the third column, we plus. So this is the total share capital and reserve, 1,006,000. Then your non-current liability and followed by current liability. So non-current liability, so this is long-term loan, 50,000, and current liability, trade payable. Okay, we have accrual just now from the list of the account, and then proposed final dividend, ordinary share, and preference share. So 79,000. Okay, so it should be the same as the total asset. Now, the difference between debenture and share. So return, if it's debenture, it's fixed rate, yeah. But for share, uncertain dividend. We are talking about, we focus on the preference share, the ordinary share. So uncertain dividend, depending on profit made by the company. Okay, voting right for debenture, they cannot vote. But for ordinary share, they have full voting right. Claim on asset. Okay, if secured, debenture will have high priority right. to claim on the asset. If unsecured, right to claim on asset comes after the secured debenture holders. So I have explained to you, secured means the condition the debenture was issued, okay, they are given in case the company unable to make payment of debentures, okay, they have a security, meaning they have specific an asset already focus on them. If company is unable to make payment, so that asset, the debenture has the right to sell it off, and they take the proceed to cover for their loss. But if it's unsecured, meaning after all the secured liability is being paid, then the remaining of the asset, then the other debentures can claim. Yeah, if it's unsecured. But for the share, this is the final person to be paid. If all the asset already distributed to the payable, if there is a remaining, then that belongs to them. But if there is no leftover, then they will not be paid. Okay, that is the difference. Then recording, when we record the debenture interest charged as an expenses. But for dividend, they are under appropriation, working notes on appropriation item. Okay. So statement of changes in equity. So this one is, remember, equity meaning referring to the share and the reserve. So the share and reserve, we are talking about this one. Huh? This is your share and this is the reserve. So plus. So meaning altogether is 1,006,000. Okay, that is equity. So equity comprised of share and company, the reserve of the company. So the statement of changes in equity shows, okay, this statement is showing the increase and decrease of the share capital and the reserve in the company during the year. Okay, so share capital, remember that include ordinary and preference share. Okay, it is important to remember that all the reserve of company belong to the ordinary shareholders. So their represent profit have been plugged back into the company from the statement of profit or loss or other amount which have been placed to reserve in accordance with the requirements of Companies Act. Okay, so the reserve is actually requirement by Companies Act. So meaning this is the amount that is being set aside by the company, okay, for a specific purposes. So revenue reserve, remember, can be used to distribute dividend to shareholders, whereas capital reserve cannot. So this is revenue reserve. Revenue reserve consists of two only. One is retained profit and the other one is general reserve. So remember, for both of these, you can use to distribute dividend. So they are basically all the profit the company up to date that have not been paid out as dividend. So that is the meaning retained profit. So general reserve created with no particular reason, meaning it's very general. So to reinforce the financial position, meaning to strengthen the financial position of the company, just like we reserve it for saving. Yeah. Now, capital reserve, this one cannot be used to distribute dividend. So what are the capital reserve that we have? Okay, we have share premium, revaluation reserve, capital redemption reserve. So share premium, like what I've explained to you just now, if in excess from the par value, it will be recorded in the share premium account. So this one can be used to issue bonus share, to write off preliminary expenses, and to provide any premium payable on redemption of shares or debentures. So this is the only use, yeah, that can be allocated on share premium. And we have revaluation reserve. This reserve created when the asset is revalued to reflect an increase in value. okay, an increase in value of the asset. Capital redemption reserve, this is required by the Companies Act. Okay, this is only to protect the creditors of the company. So meaning if a company redeem or buys back own share, otherwise than out of the proceed of new issue of share, it must replace the share so redeemed or purchased with profit that would otherwise be available for distribution as dividend. Meaning they have to set aside a certain amount of money and put into capital redemption reserve to protect the creditors of the company. Okay? Meaning if the company wants to buy back any of its share, it must raise money through issue of new share for these purposes. If not, it has to set aside the same amount out of its retained profit and call it as capital redemption reserve. So this reserve cannot be distributed as dividend. Now we have 1 more minute more. So can you go through, okay, this illustration? Yeah, because you see, whatever that you have in this illustration, okay, you list down all the share capital and the reserve. So this is the share capital: ordinary share, preference share, share premium, redemption reserve, and retained earning. Okay, so whatever the changes that happen and affecting any of this share capital and the reserve, okay, you show it here. So this is the opening balance. First thing, the opening balance, okay. So the last column is the total. You plus all this together, you get the total. And then issuance of bonus share, okay, meaning your ordinary share capital will increase and it comes from the share premium. So that's why this is reduced and then this is increased. Okay, the dividend, okay, from the retained profit, okay, it will reduce the retained profit, preference share also. And then we have redemption reserve, okay, 3,300 increase, isn't it? So where does this come from? Where is it? I need to see the question as well. Redemption reserve. So one of the directors of the company proposed a final dividend. Dividend will be paid. Okay, directors declare the bonus share entitled for the year end. The freehold land. Okay, this one. The freehold land was professionally revalued. So meaning the difference between the freehold land here, 20,000, and now it is being 23 million. This is million, 23 million. 20 million. Now it's being revalued as 23,300,000. So 3,300,000. So that's why we have revaluation reserve increased 3,300. Okay. So you go through. So do you have any question before we go?
So far,
No.
No
Later
question.
on the past year, we discuss more.
Yeah. Okay. So on Wednesday night, huh? Wednesday night and then Friday night.
Okay.
7:30. I will
Okay.
on that day itself. I will forward the link. Okay. All right. Bye.
okay.
Okay, sir.
Thank you, sir.
Thank you.
Okay. Okay.